On the morning of June 1st, Chamath Palihapitiya's SPAC, IPOE, completed its long-awaited transaction to take SoFi Stock public. In this video, we look at SoFi the company, its financials, and determine whether or not SoFi stock is a good long-term investment. You can jump straight to the stock analysis and my year-end price target with the timestamps in the description below. Let's get started. Social Finance, or SoFi, is an American online personal finance company founded in 2011 by a group of Stanford graduates with the purpose of providing more affordable loan options for students. It received significant outside investments, including from popular investor Peter Thiel, and was notable for being the first online lending company to receive a AAA rating from Moody's rating agency. In 2017, the original SoFi CEO resigned and was replaced by now CEO Anthony Noto, who had previously been working at Twitter as the Chief Operating Officer. Anthony Noto graduated from West Point, received an MBA from Wharton School of Business, and worked as both a managing director at Goldman Sachs and CFO of the NFL prior to both Twitter and SoFi. SoFi provides a suite of financial services and intends to be a one-stop shop for financial needs. Most notable are its lending products, separating themselves by maintaining a policy of no fees on loans outside the interest itself. SoFi offers student loans, auto and student loan refinancing, and mortgages. SoFi provides commission-free trading through their SoFi Invest platform, including allowing retail investors access to new IPOs in direct challenge to Robinhood. SoFi has also partnered with Coinbase to allow trading of cryptocurrency through the same SoFi Invest platform. To top things off, the company also provides credit monitoring, insurance, and banking services, including an FDIC-insured hybrid checking savings account with Samsung Pay integration and a new credit card announced in 2020. Lastly, in April of 2020, SoFi acquired Galileo, a fintech payment software-as-a-service company that dominates its industry. Galileo is a platform that offers core banking and credit card issuance functionality for digital banks and exchanges, and it is utilized by over 90% of all digital banks in North America. Galileo will bring in commercial customers and should increase overall margins for SoFi. But how do SoFi's financials look? In 2020, SoFi had net revenue of $621 million, 38% year-on-year increase from 2019, with the fourth quarter of last year increasing a huge 194% year-on-year. The company is not yet profitable though, with an adjusted EBITDA loss of $66 million in 2020. However, the march towards profitability has been steady, including a 55% year-on-year increase in earnings in 2020. As of the end of 2020, SoFi had 1.7 million users, with an expectation of 3 million users by end of 2021. SoFi has released guidance for their first profitable year, planning for a 2021 EBITDA of $27 million and a net revenue of $980 million, what would be a 58% year-on-year improvement from 2020. They project $3.7 billion in revenue and adjusted EBITDA of $1.2 billion in 2025, with revenue diversifying away from lending towards its business services technology platform, Galileo, and its financial services, such as investing, banking, and insurance. This would amount to a compounding annual growth rate, or a CAGR, of 43%. I believe SoFi's estimates are in line with the growth of the fintech industry, and I think they may even be downplaying their numbers as the company still has several catalysts lined up for growth. But is it worth buying at current valuations? As part of the merger with IPOE, SoFi was originally priced at $8.5 billion in market cap, but at the time of this video will trade closer to $20 billion based off the 860 million outstanding shares occurring from the SPAC deal. If we assume a slightly higher growth rate than projected by SoFi, around a 45% year-on-year improvement, and use an EBITDA multiple of 25x, we get a 2025 EBITDA of $1.5 billion and a market cap around $45 billion. At a 10% discount rate, we get a 2021 year-end valuation of around $25 billion and a year-end price target of $29. As always, please do your own research before opening any position. I'm not a financial advisor, and these are just my opinions. That said, I did have a position open in IPOE prior to the SoFi transition, and plan to add to my position as a result of a number of positive factors. SoFi is working to acquire a bank charter from the federal government that would allow it to accept deposits and make loans using deposited customer cash. This would provide a huge financial boon and increase margins considerably. The fintech industry is growing at a staggering rate, and SoFi remains one of the few companies that is looking to address the entire suite of consumer financial products through a single platform. SoFi is also working hard to expand brand recognition, including inking a deal for naming rights of the new LA Chargers Stadium. The company is led by an all-star team, starting with Anthony Noto, who has already proven himself as an effective executive at some of the most high-profile companies in the world. There's no doubt that SoFi is in good hands, and that's why I believe SoFi Stock is a great long-term investment. If you're interested in whether or not you should be buying coin or fixed stock, click the video links to the side. But most of all, thank you for your time, thank you for watching, and invest safe.